listening to the Non-Del Influencers Podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
All right, everyone. Welcome back to the latest episode of the Non-Del Influencer Podcast. Very excited to have Kyle Blondin from Optimal Lending, one of our newest lenders on this call. Kyle, you're Director of Originations over at Optimal Lending. Is that right?
That is correct, yes.
I was looking at your LinkedIn before we got onto this, and one of the things that's super interesting to me was your career as an internet sales manager for Mercedes-Benz. And yes. I have to imagine some of those skills have parlayed itself into what you do today. Is that right?
It very much so. I mean, I think it definitely translated into what I would call a white glove service with helping any of my clients out, right?
Yeah.
You know, car sales, people have their own perceptions of what that is and what that looks like.
Yeah.
But luxury car sales is that much more so, like, especially in Southern California, Mercedes dealership, you know, if you're not top of the line, you're not giving the best customer care, they're just going to go to the next guy. But yeah, being able to talk to borrowers and get them committed into a payment and find something that they love and that they enjoy driving is something that I think translates well into anything.
I love that white glove service because I'm sure it does matter, right? There's a difference between going to a Toyota lot and a Mercedes-Benz lot and the expectations of the customer that I'm sure walks in. Probably much of what you deal with regards to your mortgage originations, right? There's an expectation when they come to you.
Yeah, correct. I mean, there is, especially and you hit on it, the non-QM space, or we are going to hit on it.
Yeah.
There is, I think still today, a level of like misconception. You know, I talked to brokers in the past, in my past life, where, you know, they still think non-QM is subprime. And today that's not the case, right? Most of the people that I talk to today are the most qualified buyers. If you're looking at purely income, FICO, you know, collateral, they are the most qualified buyers, right? And they deserve some of that. Not saying that other people don't deserve that white glove service, but they are used to that in their day-to-day, in their life, in their business. I mean, that is what you need to put out there for those types of clients.
Yeah, I remember when non-QM first kind of came on the scene. You know, I was working at a lender at that time in the wholesale space. And I remember multiple people in senior level management being like, well, they're not that rate sensitive. They're not that rate sensitive. I'm like, they absolutely are the most rate sensitive borrowers. These are business owners, people that are clearly sophisticated enough to be creative with their taxes, I guess at the very least, or they're serial entrepreneurs who got their hands in many different pots. And so the idea that it was not a rate sensitive product, especially in the beginning, kind of stuck for a while. And now I know that in your world, I mean, they're looking for if their investors are looking for the best cash flow they can execute, right? Or if they're buyers, they're saying, hey, listen, man, like, why don't I get the same rate that an FHA government loan does at a 520 credit score? They're looking for all the bells and whistles, I'm sure, right?
Yeah, no, you're right. I think there are two levels of that, right? So if you have a borrower who's never done a non-QM loan, right? And they've never heard of a bank statement loan, which there are lots of people out there who haven't. They may not be quite as rate sensitive, right? They've gone through the ringer with, you know, a big bank, a big lender showing literally everything that they possibly have on income and have been told, no, you can't afford that, when they're looking at their income statement saying, I could buy this house in cash right now if I wanted to, right? So in that regard, I think, you know, you show someone, hey, I can get you done in 30 days. Your rate might be, you know, a quarter higher than what you would get at, you know, this guy over here, maybe a little bit higher than that. But they're saying, hey, get me this house. I want to get this loan done. I'm fed up with it. You then also have those borrowers who, you know, they are the serial investors, right? That have 10, 20, 30 plus properties, you know, who have their hands all over the place, who know the different markets, who are optimizing cash flow, or else the deal doesn't make sense anyway. Those guys are going to be extremely rate sensitive, right? So I think there are two sides to that coin. I think as the non-QM industry does grow and we start seeing more of those borrowers come into play, more loan officers and originators, you know, bringing that into their tool belt, I think the rate sensitivity will just continue to go up because obviously, at the end of the day, whatever borrower you are, rates aren't great right now. We all know that, but
Right.
everyone's offering this, that, and the other thing, and sometimes rate is what's going to get you the deal. As hard as that is to say sometimes.
Well, let's talk about your evolution into this, right? Because you started optimal lending a little bit ago, right? And then I know, why don't you just take me through like how you got started with optimal lending, and
Yeah.
then why the decision to move into the banker space as well?
So I got into the wholesale space like 4 or 5 years ago, and loved the lender I was working at. Still love them. Still have a great relationship with the ownership and my boss over there. And they really taught me everything that I know today about mortgage and the space as a whole. Um, I think what happened with optimal lending is I was working with my current partner for a number of years, right? And he saw me kind of grow from being green into knowing how to package a deal, knowing how to structure a file. If something came up to where it looked like it was dead in its tracks, how can I mold that puzzle piece into something to get it to work? And I think that kind of opened his eyes. So we had talked for a while and continued to do business, and finally he said, "Hey, I have this plan. I love you. I love what you're doing. I would like you to come join me on this." And honestly, for me, I looked at the 10-year goalpost, right? It's like, where am I going to be at in 10 years? Could I stay working in the wholesale space for this lender and continue to develop? And hopefully one day I'll get a swing at doing something bigger. Or do I take this swing now that's here? Maybe it's not the best time for it, but I trust in my partner and what he's building and what he wants to do. So decided to step into this space. And I've always been pretty ambitious
Yeah,
and wanting to do more. And so just the ability to learn the secondary markets, right? My title here is director of originations, but I'm learning about the back end. I'm learning how to sell loans. I'm talking
yeah,
to you about how to get stuff funded. Hey, what does this look like on our line if we do a certain thing here? So I'm learning a lot of things that in the wholesale space, quite honestly, are like hush hush for whatever reason, right?
yeah,
You ask any of the AEs I worked with, and not many of them, unless they did a ton of heavy research, really knew the back end stuff, or the guys that have been there for 10 or 15 years. So that's cool. I mean, I wanted to learn more. I wanted to take the opportunity, and I took a leap of faith a little bit. I think I got to chalk it up to that.
yeah. The skill set that comes with being a wholesale account executive is it's pretty rich, right? I mean, you definitely have to deal with a lot of different personalities. You got to deal with a lot of kind of stepping into a big fat mess a lot of times right at the finish line.
Yep.
And I'm sure a lot of those skills that you have from that practice are putting well to use today. And it's funny that you said that, like, you didn't really know the back end side of things as maybe as well. Myself included, when I first took this job after being in wholesale I was in wholesale for 20 years, right? I didn't know a whole heck of a lot that went into the back end of the purchase. I had trial
Yeah.
by fire when I first started, but it's very interesting, and it's extremely. You can kind of see now how, in the big picture, the sausage is made essentially, right? From
Yeah.
start origination, you're going to have a great understanding of it, all the way from the origination side of it, which I've never been a part of that front end of it, but all the way to the, hey, it's now packaged up and ready to get off the warehouse line. It's a wild thing to evolve into.
Well, it's great. And it's given me a much greater respect for, the people at the top making decisions at a lending company, right? I mean, there's obviously ebbs and flows in the market, and, you're making X. And then let's say a lender says, "Hey, we're cutting margins, right? So we're offering the best rate, but, that translates to comp sometimes." And there's, so when you're in the middle of it, right? And you're just like, man, how's our comp doing one thing one day and doing another thing another day? You're like, oh, we could have a better rate. Like, why is this person beating us? There's a lot that goes into it that you're, as an AE or an LO or whoever's probably not even really thinking about, when you're saying how much meat actually is on the bone, what are they flipping this for on the other side? How does everybody get paid? So it
Yeah.
does, it has given me a much greater respect and humbled me quite a bit.
It's probably even giving you a better respect for the risk side of things, right? Like, hey,
100%.
like I know you just dealt recently with a kind of a deal that kind of fell apart right at the end. And can you imagine if you had your own cash out there on this transaction,
Yeah.
and then something goes wrong? Like now you understand why there's a risk department in every lender.
No,
book.
100%. And it's one of those things too. When the P&L loans as of late, I think everybody knows it's, we used to call them just a quasi-stated loan. Because, at the end of the day, for a while there, you could go rent a CPA basically and have them say, hey, this is what you make. Oh, rate's an eighth or a quarter higher than a bank statement loan. Like, let's get it done.
Yeah.
You see some of that fraud, and you see some of these loans that every lender out there that are sitting on a line that they can't get sold. When you're in the chair and you're reaching out to brokers saying, hey, yeah, I got a P&L loan, blah, 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 and then you start getting frustrated as why can't we do these loans anymore? Well, when they're on your line and you owe 10, 15, $20 million that has, or more, like, I know there's much bigger lenders that have a longer tape than that they can't sell. It's one of those things where it's like, man, they're eating that interest daily, weekly, monthly. That's cutting into profits. You get too many of those, you end up just another non-QM company that had to shut their doors because they couldn't pay anybody.
Right. So talk to me a little bit about, your optimal lending is guns a-blazing with non-QM lending and what you guys are trying to do. Take me a little bit through the philosophy of how you're positioning your company and what kind of borrowers you're looking for.
So my partner, David, great guy. He's spent a lot of time in the transitional loan space, right? So he did start at Bank of America, did a lot of, residential type funding, things like that. The last handful of years has been doing at least $100 million in the transitional loan space, whether it's.
Before you go on, why, not everyone is so sophisticated that knows this. What is the transitional lending space? Can you kind of just give us a breakdown?
Yeah. So the biggest, especially in California, guys building ADUs, for example, right? They're going to get a bridge loan. They're going to get a short-term loan to go make that happen, and then transition out of it, do a, longer term. Ideally, we're seeing a lot of DSCR. If that doesn't work, they'll find a different measure of doing that, right? But it could be anything from building an ADU, building a full house. We've seen, guys put up apartment complexes. Realistically, it's just a shorter term loan to get them that quick funding so that they can go in and do their project, right? So, David's been involved in a lot of that, the last handful of years. He brought me on from mainly my expertise. He's got a huge pipeline of these people who he's put in one of these loans. How do I get them out of that, right? Get them into something more longer term with a non-QM type loan. Right. And then also bring in new clients into the space that he hasn't touched. But yeah, I think I might have lost track of the question there. But
how are you guys finding these people? Obviously, your partner has a book of business, but from your seat, one of the things that I love your background as an account executive. Oftentimes, what I hear about, especially for people that move from the broker to banker position, there's two things. One is I can't find these buyers. They're not in my marketplace. No one in my market does non-QM, which is a farce, right? That's a false statement. The other one is it's way too risky. I don't want to put it on my warehouse line. So if you could kind of just go first, like where do you suggest people find these buyers first?
Well, I think there's a couple spots, right? Number one is I have some relationships with financial advisors that, they manage people's money. They know what their business dealings look like. You get a lot of investors that way, or a lot of people that, have the assets, have the money, have those non-traditional types of income. There's a pipeline lead there, right? So you got those guys. You have CPAs who are trying to find ways to keep money in their client's pocket or expand their portfolios. I have, colleagues that will go to even lawyers, divorce attorneys are big ones, right? Trying to figure out how to get money in and out, things like that. And then honestly, if you look in markets where you have, especially in today's economy, right? You go to, San Francisco, upper end neighborhoods in LA, San Diego. Heck, I'm up in the Pacific Northwest right now. I live up here, even though most of our work's down in California, but places like Coeur d'Alene, Idaho, where you have, all these rich, famous people on the lakes up here. It's these marketplaces where, your average person isn't getting that $2, $3, $4, $5 million house, especially today, right? They're not going to afford it. So, you do have to go make some of those relationships, right? You have to make some of those awkward phone calls to people that, aren't necessarily traditional. You do have to go fight with realtors and try to make some of those relationships as well. I have I'm in the process of building my own house right now. And, I talked to my realtor about it the other day. It's like, how do loan officers, how are they reaching out to you? Biggest thing she said is do a video, right? She's like, I get calls and texts every day from people I don't know. The guy that I send most of my business to now, he sent me a video of how he could help me on a listing that I had, and did it 5, 10, 15 times in a row. And finally I was like, all right, I'm going to give this dog a bone. And he crushed it. Right. So there's a lot of that, there are some of those big, investors. Like I have a contact up here where he does, I don't even know the percentage of investors and flips and all that kind of stuff up here. We're going and partnering with him and seeing if you can get some leads out of him, whether it turns into anything or not. It is that let's make a relationship, take someone out to coffee, right? It doesn't have to be a, hey, do you have something for me? It's, hey, can I buy you a beer? Like, let's talk about your business. I'm interested in what you're doing. And so I think it's that. And it's one of those things in sales in general, right? You're always going to hear no. And I think the guys that are okay with hearing no and not, putting their head in their hands and saying, oh, did I make the right choice? Is, those guys are the guys that are going to continue to succeed, right? It's pushing through that wall. Everybody feels it. Everybody runs into it. I think it's a natural progression. And I think if you keep pushing and, it only takes one, right? It takes one big client to see what you can do for them. And then the doors start opening up. They know people who need your help. It grows from there.
I know there's some wild stats out there about the number of rental properties that are purchased, for a long time. I mean, even in my own, mind frame, I always thought that massive swaths of rental properties were being bought by these big companies, right? Just massive companies just going in and buying all these properties. But really, at the end of the day, it's a bunch of people that own 5 to 10 properties that are out there working for this market. And I was talking to a loan originator. This is probably about 2 months ago. And I go, how did you find, because he found a borrower that had 20 properties, right? He was looking for a place to put 20 different properties. I go, where did you find this borrower? He's like, it was my Uber driver. My Uber driver was the gig economy, right? He's like, happened to just do it. He loved the grind of waking up and driving for Uber. He's like, if I can make a couple extra bucks 3 hours a day while I manage all these properties, he's like, it was a fantastic conversation that turned into 20 different leads for you. So in this gig economy, everybody could be a potential homeowner or home buyer, especially with the DSCR stuff that's out there.
I mean, you're right. And I think too, there is a level of, whether people want to admit it or not, there's a level of, I think, fear about the future right now, whether it's the economy or the housing market or whatever, right? And I think, there are people that want security going forward. And even if it's, $1,000 a month extra, or 2,000, whatever it is, right? Yeah. And, real estate historically has always been somewhat of that safety net for the most. Real estate's produced the most number of millionaires forever, right?
Yeah.
And, I think, people look at rates and they look at housing prices, and it is tough. But if you're creative, if you have relationships, right, people still want to get into that market, right? It is not foolproof, right? There are collapses and things like that. But just in terms of, having equity, having income, right, having an extra level of security there, I mean, it is always the forerunner there, or front runner rather.
So one of the reasons why we got connected, and I wanted you to come on here, because you actually hit me up with an email that said, I still know people are a little bit too scared to put non-QM on their warehouse lines, which, grain of salt, right? Gray hair here tells me that there are times when non-QM does get risky and the markets freeze up and it can get a little bit dicey.
Yeah.
So what are you seeing in today's market that makes you guys so comfortable putting non-QM on your warehouse line?
I think, I don't necessarily know that it's the market per se. I think it's having good relationships with the people that we do business with, right?
Your investors are incredibly important when you're working with non-QM lending, especially on the warehouse line.
Correct, right? So, though on that side, right, making sure they know what they're doing, making sure they're going to cross all the T's and dot all the I's, making sure we have a good, account executive for, if we do need help, right, they're going to be able to help us get things done in the right way. So, even though they fund a loan, right, we're not going to have a non-sellable file 2 days after it's sitting on our line and scrambling to get stuff done, right? So there's one there. I think also the borrowers that we use, we vet fully. We've typically, for most of them, have done multiple loans for them in the past. So we know them inside and out. We have relationships with all of them. That definitely helps. And then I think it's just staying on top of the file. That one goes hand in hand with this one. Is just, you got to know the file, right? We're not, if we have a loan, for example, I was going to do an adult family home, right? Like an adult care facility. We were going back and forth about putting it on the line, right? It was a new client. On paper, it looked great, right? We could get it done. We could help them out. You start digging into it, and then you start saying, oh, there's missed payments from back here. There's stuff going on here. We're like, maybe that's when we broker, right? Maybe we don't have this borrower on our line, right? So I think there's a level of common sense. And I think that, on the wholesale channel, especially, sitting in the chair as an AE, there were plenty of files where it comes in and it was just throwing it at the wall and seeing what happens, right? And if that's the case, great. Like that's, you take it wholesale, like you don't have a ton of risk for it. Let the lender tell you if they want it or not. If you're doing that on your line, you're going to run into trouble, I guarantee you.
Yeah, it's almost like you got to pass the sniff test, right? And I've had a couple of conversations with a couple of my lenders that they just get these, wild, random phone calls from a borrower who says, hey, I need to do $1 million DSCR cash out transaction. He's never heard of this borrower before, never worked with this borrower before, just a random inbound phone call. I don't know about you as an originator, but I don't know about a bunch of $1 million deals that just land in your lap from a random phone call, right? No. So you got to figure, you got to be the one who does the sniff test on that type of stuff.
Well, you definitely do, especially if it's going on your line and there's a lot at stake there, right? I mean, I'm in a unique position where, I have to make sure it passes the sniff test, but I'm also the one who it's on if something goes sideways, right? So it's not like I necessarily have someone above me who's like, hey, Kyle, like that's not going to work, right? It's, I want this loan, clearly. I want to bring this loan and I want to get it done for them, but I also have to have the angel on the shoulder saying, hey, what's going on with it, right? Like you need to dig into this. Doesn't feel right. Something's going on in here, right? You better make sure you find it. So, I think, it is, there are bad actors out there. You see it today. I think it goes hand in hand with, fear and people wanting to get what they can. And, there's also people out there who want to take advantage of people. Unfortunately, there's always going to be that. But I think you have to have common sense, especially, new guys in the industry, right? They want to put up numbers. They want to show they can do it. Everything is in rose-colored glasses early on, right? Like, oh, we can get this loan done, right?
Right.
And there's a fine line between, hey, this is a tricky scenario, right? There's a bunch of different sources of income. Maybe you don't know exactly how you're going to fit the pieces together, but it's there. That's non-QM, right? At the core, that's non-QM. It is not cookie cutter, right? We're trying to put this together. On the other side of that line is this guy's full of and this is not, this is going to cost.
Yeah, you can kind of get that. I want to just hit on it because you guys just recently got approved with us, probably within the last 6 months or so. Mm-hmm. But was there any, being that you just came out of the wholesale side as a rep, was there any misconceptions you had about getting a warehouse line that you felt like, oh, I didn't realize it was XYZ compared to what actually really went through the process? Was there anything that surprised you?
Well, to be honest, I think I didn't really know a ton of. I didn't really, like we talked about. Like I didn't really know a lot about what it was. My buddy Chris. Yeah. Him and I worked for a number of years at the previous lender that I was at, and had a pretty good relationship. And I, kind of told him what was going on, and he kind of gave me a little bit of the rundown. Right. He's been in it a lot longer than I have. Obviously, has a good relationship with you, and has nothing but good things to say about you. So I didn't really know, but you hit this on the last podcast that I saw, where it's one of those things where it's kind of a snake eating its own tail, where it's like, oh, well, I got to provide this for this guy, but this guy wants this before he gives me that. And then this other guy wants both of these before he'll give me something that I need for the first guy. And so that was really the only tricky part. Other than that, I mean, it was pretty straightforward, right? It's obviously you guys are going to do your checks into the company and to David, just make sure, hey, we're not just coming to get X amount of money that we can go, you don't want to give us money that, is going to go to whatever, so it was, the ops part of it and the administrative part of it was whatever. But yeah, I think the biggest shock was like, man, navigating, all the different, like, we got to do this before that. But yeah, other than that, it was.
I think that one of the things that is especially from us, from our risk standpoint, I mean, we love the non-QM space, especially for the non-Dells. We're a big fan of that, and I know we can fully support that. We vet our investors probably more than we do our lenders on that side of it. Like, if you want to be an investor on the non-QM side, if you want to be a part of the first funding approved takeout investor list, it's quite a run, especially if you're going to be buying non-QM, because just like you said earlier, I need to make sure that non-QM investor is going to be there tomorrow.
Yeah.
History is littered with non-QM investors that disappear overnight quite a bit, right? And so we just want to make sure that we're protecting ourselves. So we bank a lot of our decisions about who you're going to be signing up with as an investor when you want to come to us with the non-QM side of things.
Yeah, no, I mean, that makes sense.
Yeah, I want to get you out of here on this. What do you guys, I know we just turned the calendar to the second half of 2026. The interest rate market did not help us out in the first half as we expected. Take me through what you guys are expecting to see in the second quarter or second half of 2026.
I mean, that's tough, right? I think a lot of it is going to be, I think it's going to be second mortgages, right? I know a lot of guys, especially, AEs that I've worked with, don't like to hear that, but I think that is going to be, it's going to stay on the table, right? We've all thought rates are going to come down, with what's going on in the Middle East, oil, all that good stuff. I don't know that we see much improvement in rates. And quite honestly, if you dig into it, rates might be going the other way again, right? So I think doing that, I think given that white glove service, right? How do you stand out, right? How are you going to be that person that can deliver? I think is going to be paramount. And then I think knowing your product, right? Being the guy who, if someone asks you a question, right, knowing the answer and being correct. And if you don't know the answer, right, a lot of my success came from, hey, I don't know right this second, give me an hour, I'll get back to you, right? And not just guessing. Because, there's people that I work with, I've had AEs tell me one thing, and 24 hours later, after I do my own research, I'm like, hey man, that wasn't right. So like, how do we get around this? So, I think those three things will help people succeed regardless of what rates do. And, hopefully I'm wrong. And maybe, the world gets back on track and rates come down and we're all hitting stride again. But until that day, I think it's just,
I couldn't agree more. I think the equity positions are still fantastic, and we're going to continue to see growth in that market, and just being well versed in the solutions that are out there, because there's not a bunch of conventional conforming 30-year fixed rate and term refis that's 40% falling into people's laps today, and you have to be a solution provider rather than just an order taker, I guess, at this point. So going out there and knowing your products and what's available is fantastic.
Yeah.
All right, Kyle, can't thank you enough for the opportunity. Really appreciate you taking time. Looking forward to all the great things that Optimal Lending is going to be doing. Thanks so much, bud.
Appreciate you. Thank you.
All right. Thanks, guys.
Thanks for tuning into the Non-Del Influencers podcast, powered by First Funding. For more resources and episodes, visit nondelinfluencers.com.